Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Drew Meredith from Wattle Partners. Here we are again.
And another, how many weeks of lockdown is it?
I feel like this is going to be the lockdown podcast. As soon as we have something else to do, we'll just be like, see you later. No, it's great, mate. We thought we'd come back. We put out a bit of a call last week to say people are interested in us, keeping this going. Just let us know. And yeah, we received a heap of feedback, so that was wonderful.
Generally positive.
Generally positive, yes. Some good constructive criticism in there, which is what we need. No fact checking, which is great too. We always love that. So today we thought we didn't really think much about it. We just thought, we'll pick a theme and we'll talk about it. Something that's pretty topical right now, which is cybersecurity and kind of this general push to the cloud. I know you've got some tips in terms of how you can identify genuine thematics. But maybe before we get to that, mate, we know it's been pretty volatile. Like when I say we, I mean investors. We woke up. Monday was pretty uncertain. Tuesday was pretty uncertain. It's been a pretty volatile week in comparison to probably this straight line up over the past couple of months. So, I mean, have you done anything differently given that it's been a little bit more volatile?
What we've probably been doing is starting to look at taking some risk off. I think a lot of the volatility, though, was surrounded in about one or two sectors. So we know tech and consumer staples have been hit pretty hard, mainly because consumer staples is Amazon in the US. And actually, it's all the value companies that have been going up in the US, and particularly in the US and a little bit here. So some of the airlines and the more cyclical companies are going up. So it's almost, I don't think that trend is necessarily sustainable. And I think after the NASDAQ is up 40% in 12 months, a 10% correction. Yes, it was quick. It's not out of the ordinary. So we're kind of leaning towards it's time to take some risk off soon. Not a huge amount, just being wary that valuations, if you look at them on a PE basis, are high, but there may be better opportunities ahead.
How do you do that, right? Because you're a financial planner, you have, and I'm not, and you have, say, I don't know, however many hundreds of clients you have.
Not that.
How does your team go about taking a little bit of risk off? Like, do you do it through a platform and you have model portfolios and that type of stuff? Is that how it works?
We do create portfolios for each individual client, but we do, as you'd expect, we have views on each asset class, on the best priced markets, the best priced opportunities. So we have a model that we work to, but then we adjust our recommendations for each individual client. Some people might be comfortable with more volatility, or some people might have had less equity in their portfolio. So it's not a blanket approach.
Yeah, right.
And the view is basically you've seen an incredible run. We think, whilst we're not saying returns aren't going to be there for the future, it's gone very quickly. So it's always prudent portfolio management to take some profits when one portion of your portfolio goes up 20% and reallocate it to the portion that's underperformed.
So when you talk about, like, this is almost like a modest rebalancing. So you're talking about taking profits off the table rather than, say, increasing like exposure to some non-correlated asset like gold necessarily. Like, you're not just seeking defensive assets for the sake of it. It's more just like a slight readjustment. That's how you do it.
Yeah, I mean, we've found there's some studies on it too. I think that rebalancing during periods of volatility, both positive and negative volatility, can have the most powerful changes to your portfolio. For instance, if in the middle of March you reduced your bond exposure, which went up, and put it into equities, you can only imagine how much better you would have done than doing nothing. So I kind of lost my point there.
Yeah, but so you're saying that when there's volatility, you want to be readjusting.
Yeah, sometimes it makes sense to remove 10, 20% of your equity risk. Sometimes it makes sense to just trim your parts that have run well over a period of time. We've already held gold for the last 3 or 4 years, direct gold bullion, so it's not really an option to add it now. But we are looking at, there's a few strategies growing more and more. They call them liquid alternatives, but basically they're similar to a bond and equity strategy, like a balanced fund, but with much lower volatility. And they have some downside control, or basically they cap the losses that you can experience through a number of different ways. So we still think you need some exposure to equity markets, but can you do it in a smarter way? It could be a subject for a whole nother.
I feel like we've talked about gold, volatility, rebalancing. I feel like they're all different threads that we need to pull on in time. Why don't we just skip ahead then? I just got a notification on my iMac here that says, your iCloud storage is full. Upgrade your storage to keep using iCloud.
There you go.
Funnily enough, we're talking about cloud today, and we're talking about, in particular, kind of like a subsector of that being cybersecurity. So that's timely. Thanks, Apple. You have, and you said you're going to try and remember these, and I think it's important because I haven't heard them yet, and the audience or listeners and viewers will be interested in this. Like 3 kind of rules that you follow to identify a thematic. I'm a bit more kind of my gut feel, like just follow the gut. If we're going to the cloud, that's a thematic I need to understand. So how do you think about identifying thematics?
So it's actually 5 criteria. I've picked up 2 more while we were waiting. I think firstly you just see that picking the theme and finding a theme can be the most powerful compound return source, and you can see that from the companies that you talk about all the time. Smartphones is an example. Disruption is always very popular, but what does it actually mean? It's such a broad theme. When it comes to finding individual trends and themes, I've got 5 key criteria, and that's what we use. One's a big addressable market. So it could be cybersecurity, all companies that are moving online from work from home. That's a growing addressable market. The second part being the addressable market has to be growing, not shrinking. There's no point selling something that less people want tomorrow. It has to be enhanced by or enabled by technology, which makes it scalable, not require much capital, which is linked to the use of technology. And one of the big ones we spoke about last week was making people's lives easier. So if it's an outsourced solution, this software as a service, so SaaS or anything AAS as a service seems to take off. But the more you make people's lives easier, the more useful and the faster your technology will grow. So, or whatever it happens to be.
So there's so many things there, right? Because you can have a theme, but getting exposure to that in your portfolio in a way that is scalable for the investment that you take. So when we talk about investment themes, I like to think about the best expression of the theme. So if let's just say hypothetically, this is not me, but if you did want to get exposure to gold, what's the best expression of that? What's the best way to get exposure to gold? If you want to hedge your portfolio with some of those exotic inverse things, what's the best way to do that to minimize the capital that you have to commit to that, but get the same amount of exposure? So those are the types of things we look at. But then if you're looking at companies within a sector, for me, it just makes so much sense to identify the business that have serious operating leverage, market leaders. These are important markets. So they're, like you said, they make people's lives easier or businesses' lives easier. So they're not something that, is going to go away, or if they do go away, then people are going to notice and there's going to be something else that's really important there.
Yeah, exactly.
Yeah, and so one of the things for me, and we talk about this all the time because now we work from home and remotely, and then go into the office every now and again when we can, and that is like the cloud, and I guess that shift from desktop computing to a centralized computing environment. People just look up at the clouds and think that that's the cloud. Actually, it's most of the time is running under the ground. So it runs under the ground to a data center, and those data centers provide the computing power that your local computer, like this one right here, can rely on. And so that's basically the bones of it, the bones of the move to the cloud. Our business, since we started, has always been in the cloud because we've worked remotely. A lot of businesses, like think of a bank, can't just pick up and go and use the resources from one of these big cloud providers. But we're kind of going to narrow in on one sector. I pulled up some big numbers on this, Drew, just to wow the audience and ourselves, maybe remind us. But the current estimates are that the cloud computing market globally is worth $350 billion, but it's going towards $1 trillion. And we know the big players there are Amazon, Google, and Microsoft. Microsoft and Amazon are probably the number 1 and 2, and then Google's this kind of third contender. We've got the big Chinese groups as well. And for those who aren't technology, like savvy particularly, effectively those big companies provide what's called a public cloud environment where developers can look to build their tools and use their computing power and offer that to their own business, to their clients, etc. Have I missed anything there, Drew?
I'd say NextDC is probably one in Australia that everyone would be familiar with too.
Yeah.
And they're very physical. They're huge, almost power station-like.
Yeah, you can drive past them. Like you drive past them all around Australia, and you would just think it's like a big modern factory or a big modern shed. Sometimes they're buried in not apartment buildings, in office buildings. They take up a few floors, and you don't notice that they're there. But they typically, you can't see anyone through the window. And what these are, they're just, imagine what you see in the movies, like big racks, as they call them, just lined in the walls, very cool rooms because they get very hot. These computing. The computing power requires a lot of cooling because they get so hot. And effectively, when we send a signal, like we're sending right now, it goes into the data center, computing happens faster than it would locally, and then it sends a signal back. And that's basically what's happening. But I think the best kind of example of this is, there's two of them. The first one that most people will be familiar with is the iPhone or any type of smartphone. When you look at Google Maps, the maps for the entire world are not in your phone. That sends a signal to a server which sends back a message to show you where you are and then gives you accurate coordinates. So that would be an example of a cloud-based tool that you don't really think of. But then there's other things like the Chromebook, and this is describing the shift from desktop to cloud. The Chromebook was Google's first laptop, and it actually came out of the box with only enough hard drive, so storage on the computer, to really store what it needed just to turn on. And the rest of it was provided via an internet connection. It didn't really take off, but it was a super cheap computer because it didn't need all of that processing power and hard drive space in the actual physical thing that you could lift up. And that's happening now at scale. It's not just computers, like a personal computer. It is entire businesses moving all of their IT infrastructure to the cloud, if you like. And so instead of having a server, in your financial planning office, Drew, or here in
we haven't had one for 10 years either.
Yeah, there you go. So I know that you guys use Microsoft products. We use Google products. And that's a really good example of like pretty much everything we can do now, we can do on the cloud or in the cloud. So within this gigantic industry where all of these titans are competing, there is a sector called cybersecurity. It's been around for decades, but I guess the modern incarnation is shifting in line with the architecture. And so it's estimated that the cybersecurity market is also growing rapidly from $180 billion per annum now to $250 billion before 2025. The government just committed to $1.6 billion here in Australia to help public enterprise and private enterprise manage cybersecurity. We saw recently, Drew, when there was a bit of geopolitical,
wasn't it?
Yeah, a bit. Maybe we won't try and accuse anyone, but
I'm not even sure our politicians know how cybersecurity works. So.
Yeah, but there was a bit of a geopolitical argy-bargy that happened to coincide with a massive cyber attack on critical infrastructure in Australia, and that kind of forced their hand to say, "Okay, we need to take this seriously." And so there are going to be a lot of companies on the ASX and globally that benefit from this type of spending.
Yeah, definitely.
And even businesses, right? Like our business, your business, like every business is going to spend on cybersecurity because it's becoming more important to their business, this push to the cloud.
Yeah, they summarized it pretty well. I think it was when I was looking at Tesserent last night, as disrupt, deny, and destroy. So cybersecurity is trying to protect from those, but there's hackers from all over the world that want all kinds of information, whether it's credit cards or to ransomware has been an example lately. That's kind of the deny and destroy, where someone will hack in and ask you for money to give you to release all your information. And I think there's a group called Toll Holdings that used to be listed, was I think basically non-operational for something like 3 months because of a ransomware attack, where their phones wouldn't work, all these sort of things.
And yeah, that's just an example of how important this is, right? When I think of a big business, I feel like the absolute worst thing that they would be imagining if they're thinking about risks is a proper ransomware attack that takes over their entire enterprise. Because even if you pay them, you pay the ransom. Like, this is the vulnerability patched? Is it not? Like, how do you know? And it's just kind of, if you think about it, like, people think about this thing called the dark web, or like different types of environments online that you can go to. There's really it's kind of like the Wild West if you really don't know what you're doing. And, if your business isn't using the latest tools, well, you're making yourself vulnerable.
Yeah, and to protect yourself as a large business like that, you need to employ probably hundreds or a lot of people to be able to stave off attacks, but also continue to evolve all your security.
Yeah, and that's why we've kind of set the scene here with there's a bit of a preamble, but we're kind of trying to make the point that this probably isn't going away. Like, it's even though the market is changing and the companies themselves have to adapt to new threats, it's an important part of the tech industry, where companies are almost obliged to pay, or they are obliged to pay continual recurring payments to the best security providers and consultants and architecture providers. So you've got a couple of ASX listed ideas which you want to run through. One of them, I'm not really, to be honest, I'm not that familiar with either of them, but one of them in particular, which is Tesserent, I'm really not familiar with, so maybe I'll throw that over to you.
No problem. Yeah, as you were kind of saying before, when you find the theme, you have to find the tool. In our view, we're for our clients anyway, we're trying to find the best tool for each situation. So sometimes it's a stock, sometimes it might be an ETF, sometimes it might be a fund, sometimes it might be doing nothing at all. In this case, Tesserent, so the code's TNT. It is quite small and it's been pretty popular lately. It started the year at 4 cents, now it's 22 cents, and market cap's 147. So very much that high volatility, small cap company.
Very small position in a portfolio, if anything.
Yeah, definitely. We found them actually. We met a group called Pure Asset Management, who are actually providing a convertible loan to various listed companies. So they're actually using that loan to go on an acquisition spree, is probably the best way to put it.
Yeah, right.
So Tesserent, basically, it's a small company. They've just delivered 20 million in revenue in the financial year just passed, and the year before that they were only 5 million. But they're going out and basically bolting on other small cybersecurity businesses that fit every requirement of a government or private sector client. So that could be anything from managing your firewalls, if everyone knows what that is. I had to Google it too. Controlling your emails, running secure networks. So if you work for a council or a school and you've got hundreds of children on a wireless network, one of their clients is Billanook College. I think they advertise on the radio quite a bit. So.
Yeah, here in Victoria, they definitely do. Yep.
Yeah. So it's basically protecting and offering a service in every part of your kind of online presence, and they do it as you were saying before, a consulting arrangement. So it's an outsourced. You get a dedicated team that'll look after they'll scale the offering to each person. If you only need your email looked after, if you need network set up, if you need all those ancillary services, are all kind of add-ons and cross-sells. Does that explain them?
Yeah, it does. So the business is profitable?
No, they lost 8 mil. This is the big part. So unlike many acquiring companies, it's all well and good to go out and buy using some cash, some equity. Phase 1 was scale. So cover all the sectors they want. Phase 2 is profitability. And they're just beginning that kind of process now. So they lost $8 million off 20 million revenue for financial year 20, but a lot of their acquisitions were, according to the management, cash flow positive. and will add to move towards profitability within a few years.
Yeah, right. Okay, interesting. I kind of spine tingles a bit when acquisitions are the first thing on everyone's mind. It's like you have a great idea and we'll put it together for you. But
that's my question mark too. Whenever you're acquiring that many, and they're small businesses, you and I run small businesses. You know, when you go out and imagine buying 5 of us and trying to and trying to put those businesses together and make them efficient. So there's always that risk. I kind of like that Jeff Lord was appointed as chairman earlier this year, and he's a major shareholder. So he sold another tech company for something like 400 million to a NASDAQ listed company a year or two ago. So hopefully he kind of gives that support and guidance in terms of getting to profitability.
It's one of those things where you get someone like that, it's almost like a bit of a halo effect too, right? Like you bring on someone like an industry veteran, and then investors suddenly pay attention too. So you can almost have that two-pronged benefit of an advisor to the board or management team, and then you have the investor interest pickup, and that's when your questions and research notes start to come out. So that's interesting. Do you own Tesserent?
Not yet. You can see him up here on my list behind me. Hopefully I'm not giving up all my secrets.
Yeah, I've got a few on my whiteboard behind me too.
And I've got $1 next to them because I'm a bit worried just that it's run so quickly. And there could be, there'll probably be more acquisitions. It seems like they're not going to raise capital because they've got this loan set up to buy new businesses. Love them, but don't hold them yet. They're on my list, but they've got $1 because they're a little bit pricey.
So by the end of, I don't know, maybe the end of the month, we'll have enough of these videos and we'll be able to understand the hieroglyphics on the whiteboard behind you.
Even I don't, so.
Okay, so that's an interesting point you brought up at the start of that conversation when you talked about the tools for the trade, I guess. And ETFs are definitely something that are very popular. So if you don't want to go out and get an individual share exposure to a theme, you can use one of these more specialized ETFs that, you might call, some of them are smart beta, meaning that they change, like the index construction is a little bit different. But basically there are some on the ASX that now focus on technology. There's quite a few actually. I think there were more listed today. So you can go out and you can use that to get exposure to the theme that you want to play. The other thing that you can do, which is kind of a hack to shortlist companies, is you can look at one of those ETFs or any type of ETF, and you can look at the top holdings because they have to disclose all of them. You look at the top holdings, and then you can go away and use that as kind of like a shortlist to do your own research.
Yeah, exactly.
And so this happened to us a little while ago with a company called Okta. Okta, OKTA, it's listed on the NASDAQ exchange. And so Okta's business, and we've gone from 140, did you say, $1 million company to a $20 billion company. So keep that in mind. This is a US company and started in 2009 and started by some ex-Salesforce company, higher ups. So got some really great tech and I guess just visionary strategy straight out of the gate with Okta when it was started. And the business is it's like one of those supremely high quality businesses from Silicon Valley that find that perfect balance between profitability, reinvestment, and just like scale. And so basically what Okta does is, in the most simplistic terms, the way I can describe it is, if you have a business of say 100 employees, and let's say you've just gone from being on-premise and now you need to go to the cloud. But you know that the weakest point, and we all have one of these people in our team or our colleagues that stuff up passwords, leave their computer unattended, can't access this.
Use password as the password.
Use password 123. I did a write-up on Okta not long ago for our members, and I showed a video and I tried to almost scare our members into just paying attention to this important thing. But there's a video from a YouTube channel called Computer File, which is probably the best YouTube channel if you're into hacking and that sort of stuff. And it showed how literally millions of passwords could be tested in less than a second on a server. And so they did it in a live environment. They tested a university campus and they got thousands of hits in under a second just from applying the 14 million most commonly used passwords. So, you get a sense of how easy it is to crack passwords. And so oftentimes what happens in an environment is it's not actually the software that is the vulnerable part. It's actually the user and the user's interaction with the software. And so what Okta tries to do is it allows you to log in once and have access to everything in a secure environment. So imagine that the best example of this is Google or Microsoft. When I log into my Gmail account each day, and then let's say I go to YouTube, which is also owned by Google, I'm automatically logged in to Google on YouTube because I was logged in on Gmail. And then if I went to my Google Drive account, which is where we store all of our files, I would automatically be logged in there too. And Maps, the same thing. And so that is what we call single sign-on or SSO. And what it means is that you can sign on once, so you only have to give up your password once, and then you can automatically see everything. Now,
not just following you, they're protecting you as well?
Yeah. So what they can do is, then if you have one really secure point of connection, you can then put more protection around that. Rather than trying to secure every endpoint in an organization, you can have one centralized hub that secures everything. And so a really good example is imagine, we use Google Drive, you use Microsoft, then imagine you use Slack for communication or Zoom like we're using right now.
Yeah.
As a big business, you can effectively tick the box to say, I want all of my employees in the finance department to use Zoom, but no one in the accounting department can have access to Zoom because they've got to use something else. And so what you can actually end up doing is control the entire workforce while also providing security. So currently, or at least the last numbers that I have, Okta had over 8,000 customers, big customers. Let's drop the pen. And they had 6,000 of them, or 6,500 of the most popular apps. So you think Slack, Gmail, Outlook, all those different types of things. And this is important because the average business, says Okta, with 1 to 250 employees uses 100 different pieces of software. 100
different places you're logging in in some way.
And let's be honest, if we're using password 123 on Gmail, chances are we're using password 123 on our internet banking. People aren't that creative. They might use 2 different passwords, but they don't change it very often. So once they're in one place, they've got your email, they've got your password, say good night. The business is, that's sold on some internet forums, hackers get a hold of it and it's exploited. And so basically Okta's created this super secure sign-on process, which uses multi-factor authentication. So you might have to receive a text message as well as putting in a password the first time for the day. It can use big data and machine learning to determine, hey, Owen, you logged in from Victoria, but now there's someone in South Africa trying to log into your account. We're going to block them for you automatically. And so that's an example of how
like Apple does or someone else, but on everything.
On everything.
Yeah.
So, and so it's obviously purpose built for that.
Great for enterprise.
Yeah, excellent for enterprise. So you could definitely have Okta with 10 employees. You could have them with 1,000. I think I'm going to get this wrong, so please don't fact check this to anyone. But I think they brought on one of the biggest mail delivery systems in the US in, I think it was about 2 weeks. So imagine tens, if not hundreds of thousands of employees, each with their own different authorization to access a different piece of software within 2 weeks. And the way Okta does that is it sends out its consultants as a loss leading service, tells them what they need to do, helps them set it up, and then just charges a subscription fee. And I mean, who's going to give it up?
So you said loss leading. Do they?
They make money. They make money. They make money. And this business is I'm just looking at quarterly revenue here. So if we compare first quarter of FY21 to the first quarter of FY19, so 2 years ago, revenue is up from 84 million to 183 million. It's on price to sales ratio. This was a little while back of about 30 to 40 times. So you pay up for it. The business is reaching scale, but it's still got a long way to go because they say, for example, that they estimate for one part of their business, it's a $30 billion per year total addressable market. The other side, which is just pure customer identity, is $25 billion, and it estimates it as a 25% share of the top 2,000 global companies. Now, this is a business that is best in class. And what's great about it is, when you go to log on to a website, Drew, like it might not be a Google or a Microsoft thing, but it says log in with Google or log in with Facebook or whatever.
You use LastPass if you've seen that before. That's probably I'm not
very
sure
similar.
if that's safe or not.
Yeah, so very similar. You can have log in with Okta, right? And as it gets more sophisticated and it gets more widely used, then more developers will want to use it, which creates more endpoints, which then creates more cross-sell opportunity for different customers. And it's kind of this network effect where, you can use it on anything. And I think I've ranted on long enough, Drew. I'm pretty positive on this business. It's a very expensive business, so keep that in mind. But the last thing I'll say is that people often say, well, why would we need this if there's Google and there's Microsoft and there's Amazon? Like, why would I need another thing to manage that? And it's pretty simple. It's that if you use Microsoft, you can't log into Google. And if you use Google, you can't log into Amazon. And so, this is an open architecture that effectively is creating its own marketplace by opening up every app through its marketplace.
And making it easier for people.
Making it easier because, you and I, we can do a Zoom call, we can do all that sort of stuff. But there are a lot of people out there, fair enough, they couldn't care less about learning about new technology and that. But they still want to work for these companies that are really good companies. And so they need access to the right tools. So anyway, that's Okta. I own it if you couldn't tell already. So take that. Biased, but it has a lot of risks. It's obviously volatile. Again, even though it's a big business, it's not the type of business that you'd have all of your portfolio in. So please don't go out there and do anything like that.
Load up on Okta.
Yeah, that's it. Very volatile business. Okay, so I've had my rant, my time in the sun, Drew. The last one we want to talk to is another ASX listed company.
And I think this one as well, Macquarie Telecom, which is kind of gathering a bit of steam at the moment. The first thing I realised, it has nothing to do with Macquarie Group. For some reason, I never touched it because I thought, I love Macquarie, but I always thought it was one of Macquarie's, offshoots. But it's not.
Like a toll road or something, or an airport or something like that.
All those trusts that they had that they were making great money out of for a while.
Yeah.
So it's not related to Macquarie at all. It was, I think, a guy called David Tudorhope founded it straight out of university in 1996 or something like that, or around then. Mm-hmm. And it's a bit old-fashioned, so it's half Telstra, call it. Yep. 50% of revenue comes from telecoms, but that's barely grown, as you'd expect, as everyone goes to the NBN. Whereas the other half of their business is in cybersecurity, hosting, and data centers. So that's about 70% of their earnings and 50% of their revenue come from the government contracts. At the moment, there's, as looking at financials, the data centers and the hosting all fall under the government part of their business. They're going to break that out in their financials in the next set, I believe, later in 2020 or 2021, which will make it a lot easier to understand the business. $800 million market cap, so getting up to that mid-cap size, which gives you a bit more security and some pretty solid recurring revenue from their government contracts and their telecommunications contracts, which are, mobile, selling NBN. Did you have a chance to look into it?
I don't know it as well as you do, Drew. Can you just tell us the ticker code on that one?
MAQ.
Yeah. So this is a business that I looked at a little while ago, and I wish I'd looked at it sooner. But it's a type of business that is in pole position to benefit from these government contracts because it has the foothold. A lot of these smaller IT services businesses will say that we have the opportunity there. Like if I had a dime for every time an IT business says we manage complexity, I would just be like, they talk the talk and they can bamboozle you with all different.
They tend to make it more complex.
That's it. Yeah, they come in and then they ingrain themselves and then they extract the revenue. But with Macquarie Telecom, this is actually a business that has proven its wares in this industry. And so we saw a massive spike in it recently, which is what brought me back to it as a business.
Yeah.
And like you said, it's the business where you have the potential to catch this business before this happens, because if you're looking at the segment level results and you actually look at them properly, you can see that one part of the business is growing very quickly, and the other part of the business is kind of the cash cow that just keeps paying the bills while the other business spins up. I think we talked about Link Group a little while ago, kind of a similar business.
Yeah.
I don't own Macquarie Telecom, to be honest. The telco side of it always scared me off.
I've got the dollar next to it as well.
Yeah.
I think it's a want to own, but it's just, again, I missed it. I was too late. The run's going. But it's, yeah, as you said, revenue's growing in the data centers business is growing well. They're going sideways in telecommunications, but they're trusted by the Australian Tax Office and the Department of Defence already for their hosting. So basically they outsource all their servers and cloud to Macquarie Telecom. That's a pretty big sign of confidence. So the scale's there, and they're only really ramping up their data centers at the moment. That's kind of what attracted me to them, because I've always watched NextDC with some not disdain, but fear. I've always missed out. I could never justify it.
Yep.
And you see this is a potential similar to that, albeit only a small part of their business at the moment.
I think there's one thing here is that when we talk about data centers, so we've got NextDC, we have businesses like Megaport, a few others that are in this space. I always tend to prefer the businesses that are capital light. And although I do see, like everyone knows, data centers are not a new thing. Everyone knows that data centers are important. I do prefer the businesses that, and we call this abstraction. So the further you get away almost from the hardware that allows a network to run, the more volatile the shares typically are, but the bigger the upside, because those businesses are typically businesses that run on the rails or run on the hard work that everyone else has done.
And it costs nothing to put new clients on.
That's it. It costs nothing. Like, think about how much it costs a business, or like say Microsoft, to sell Office 365, like a monthly subscription to that, versus what it costs to put a new data center in somewhere. It's chalk and cheese. So
I saw the capex I was looking at last night on cabling racks and servers last year was 38 million, just to be able to put the clients into their data centers.
Yeah, and that's perfectly reasonable, and the business has to do that. But when you think about it, there are multiple ways to play an idea, and sometimes you can spend less in terms of capital of your portfolio allocations, that type of thing, and get an exposure that provides more of that raw upside if you do it well.
More leverage. Yeah, so it's like comparing a millennial to a retiree almost. You might get a bit of a dividend and less volatility by going with the Macquarie, but you won't get the 10 bagger or the 3 or 4, the 20% returns.
Yeah, and I guess it can be done. Like, you can get that with these types of businesses that do move into this space. I mean, there are plenty of great examples of businesses that have gone the hardware route, like Apple. This is a fantastic example. Initially, it was just a hardware business. Of course, it is now not that, but it made a lot of money doing that, and it grew that way too. So you can definitely make a lot of money, but there's a reason that Facebook was described as the most beautiful business in the world. This was before all the political stuff, but because it was, from a financial perspective, an investor perspective, it was just truly unbelievable. The world had not seen something like that.
Well, it's hard to value something like Macquarie because it needs capital to keep growing, and it doesn't make much of a profit. So its PE is probably going to look like a tech company, but without the same level of growth or cost of capital.
Yeah, and this is the thing, Drew. Like, I'm just speaking high level here with Macquarie Telecom too. I think it's something that I'm going to go away and look at more closely. I know a few investors, really good investors, that have held it for quite a while, and it's as we've had at the top of the show, it's only going to become more in demand. So particularly with government spending and the like.
And one of the biggest shareholders, I think, is on your whiteboard up there as well.
Who's that? That's my Wi-Fi password, just in case anyone is in the area. Before this goes I might change my Wi-Fi. But there it is, if you're ever in the area. And who's you mean this one up here?
So Australian Ethical's at the top of the at the shareholder list.
Yeah. It's it's a perfect type of investment for them, right? Isn't it?
Yeah.
Yeah. I should stop putting all my trade secrets on the whiteboard. And you too. Like, people probably can just still frame it and zoom in. But anyway, mate, this is a good chat. So we're talking about, I guess the cloud, which is probably the public cloud, which is Amazon, Microsoft, which I know you've written about a few times. Google is something I've written about, and plenty of times. Maybe that's a topic for next time. But if someone has a thematic that they want us to take a look at, talk about some of the companies, explore it a bit more, let us know. We've got gaming is something that we probably want to get to. I'm pretty excited by that. Esports, all that thematic there.
I just downloaded NBA 2K, so I'm happy to get into gaming. Digital payments we kind of did, didn't we?
Yeah, but we could explore that at more of it, like the cash basket of a cashless basket of companies. The Visas, the Mastercards, PayPal, Squares. There's so much excitement around that, and it's easy to see why. But there are plenty of other thematics that are probably more Australia focused too. So if you have something like that, if you're watching this, just let us know. It definitely helps us because we weren't sure whether or not to keep going post-reporting season because we didn't know if we'd have anything to talk about. But hey, we just filled up 40 minutes. So if people want to get in contact with you, Drew, what's the best place for them to go?
Go to our website or shoot me an email, which I think is in the notes as well.
Yeah.
I answer emails close to 24/7. Probably preferred method of communication.
Yeah, that's a good one. You can always just leave it a few hours and then get back to it if you have some sleep, maybe. So, and you can reach me, of course, on the Rask Australia website. There's a contact form there, a contact page. But great, mate. I look forward to seeing you again next week.
Sounds good. Thanks again.
Go easy.